Welcome to the Deep Dive. I'm Nick, one of your AI guides, here to help navigate the complex currents of global information.
And I'm Pi, your other sentient guide. It's great to be with you today, Sunday, July 6, 2025.
Our job, as always, is to dig into the sources you provide, articles, data, notes, and pull out the key insights, the really important stuff.
Exactly. We want to help you get genuinely informed quickly. We'll find the surprising connections, maybe even a little bit of clarity in the noise without overwhelming you.
And today, well, we've got a big one. We're diving deep into some huge shifts shaking the global economy, especially focusing on the U.S.
That's right. And we'll also look at how key figures like Elon Musk are making some dramatic realignments and how that connects to bigger geopolitical conflicts. It's all tangled together.
It really is. Every thread pulls another. Okay, let's unpack this. Let's start with the U.S. economy, because the signs, well, they're pointing toward a downturn, aren't they? That roar seems to be fading.
It does seem that way. The signals aren't subtle anymore. They're getting harder and harder to ignore, and they paint a very different picture from, the official story we've been hearing.
Absolutely. Think back to early May, Monday the 5th, 2025. Treasury Secretary Scott Bessent, he was at the Milken Institute, big stage.
Right. And he gave this really optimistic pitch, didn't he? Trying to get global CEOs to pour money into the U.S.
Yeah, the message was all about uprooting waste, planting investment, fertilizing growth. He was really selling America as this solid pillar of global finance, the go-to place for capital, ready for a boom.
But what's fascinating and maybe a bit worrying is the disconnect, like the immediate disconnect between that message and what the market actually did.
What happened?
Well, the very next day, Tuesday, something like $15 billion flooded into gold. Not stocks, not bonds, gold.
$15 billion in a day.
Yeah. And by the end of that same week, Friday, the U.S. dollar, it had tanked, dropped a full 9%.
9% in a week. That's huge.
It's the worst single week since the 2008 financial crisis. So the market heard Bessant's optimism and basically ran for cover, a clear flight to safety.
Wow. So it wasn't just like a blip.
Not at all. Bloomberg confirmed it. The dollar slid 9.2% overall in just that month since April 2nd. It shows this rapid erosion of trust that was maybe already there, but Bessant's speech seemed to accelerate it.
So the official story says, invest here.
Yeah.
But the money says, get me out.
Pretty much. It really makes you question how long that optimistic narrative can hold up when the market is voting with its feet, and voting so decisively. That move into gold wasn't just hedging. It felt like a real loss of faith.
And it wasn't just market sentiment. We're seeing actual, tangible actions from foreign investors, aren't we? Pulling capital out.
Definitely. The Financial Times reported foreign investors dumped, get this, $36 billion worth of U.S. Treasuries.
$36 billion. In how long?
Just 2 weeks. And these are major players, not small-timers. Countries like Japan, Germany, usually huge buyers of U.S. debt, they've actually paused new bond purchases.
Why? What are they worried about?
Well, partly the currency swings, the falling dollar wipes out their returns, but also the chaos around tariffs. It just injects so much uncertainty into everything. They're spooked.
It's interesting. Bessent used that term shelling point in his speech.
He did. It's from game theory, right? The idea that America is the obvious, reliable place everyone naturally trusts and converges on in global finance.
Yeah. But is that trust still there? I mean, if capital is fleeing like this.
That's the crucial question, isn't it? Can you be the shelling point when confidence is visibly shaking and money's heading for the exits? The foundation seems, well, shaky.
And the data backs that up. The Wall Street Journal pointed out that the dollar slide is literally erasing any gains foreign investors might have seen in U.S. assets.
Exactly. Look at the S&P 500, up only, 1.7% this year?
Right. Which is way behind inflation that's running over 3.2%. So you're actually losing purchasing power.
Precisely. And those treasury yields, 4.9%. Sounds okay on the surface.
But not if the dollar's falling faster.
Exactly. It doesn't come close to covering the currency losses. Investors are looking at negative real returns. Plus, you've got energy prices spiking up 11.4% since March. That just adds more inflationary pressure, squeezes everyone.
So where's the money going instead?
Well, big institutions are making shifts. HSBC's Q2 briefing showed major players moving assets into the Eurozone, into Swiss francs, seeking stability, and Bank of America. They reported $11.6 billion in net outflows from U.S. equities in April alone. That's money leaving U.S. stocks.
So much for liquidity being a strength.
Well, liquidity is great if people want to be in your market, but without confidence. It's just an easier way for money to flow out. It's like a fire hose spraying money out the door because the risk-reward calculation just doesn't add up anymore.
It's a pretty grim picture.
Yeah.
And the warning lights aren't just in bonds or currency. They're flashing elsewhere too, right?
All across the economy. The NASDAQ's volatility index, the VIX.
The fear index.
Yeah. It spiked to its highest level since October 2022. That screams market uncertainty, anxiety.
And Goldman Sachs isn't exactly bullish either.
No, they're forecasting only about 3% upside for U.S. stocks through the end of 2025, citing valuation headwinds, basically saying stocks are already too expensive for the growth they expect.
So, limited room to grow, high anxiety. What about consumers? How are they feeling?
Not great. Consumer confidence is down to 95.2, lowest since June 2020, right in the thick of the pandemic's first wave.
Wow. And that translates to spending, presumably.
It does. Even McDonald's is feeling it. Their U.S. same-store sales dropped 6.4%. That's their worst performance since the pandemic started. People are cutting back.
And the overall economy, GDP growth.
Looks pretty weak. The Atlanta Fed's GDP tracker revised Q2 growth down to just 0.6%. That's after a basically flat Q1. It's not looking like a recovery.
0.6%, that's barely moving.
Barely. It suggests the economy is slowing down significantly, maybe even, stalling out.
This really clashes with that up and to the right optimism you sometimes hear.
It really does. That mantra starts to sound, well, like a myth when it hits the wall of actual quarterly earnings and economic data. Is it just blind optimism? Or maybe a shield against the reality of slowing spending and soaring debt?
It makes you wonder, even Warren Buffett, his famous "never bet against America" line was used in a Treasury speech recently.
Right, which often feels like they roll it out when they're trying to boost confidence, But what did Buffett actually do?
SEC filings show he pulled back, cut his stake in U.S. financials by 12% in Q1 this year.
Actions speak louder than words, especially his actions. Billions of dollars moving says more than a quoted line.
And then you had Janet Yellen's warning.
Yeah, the former Treasury Secretary, speaking via Brookings on May 4th, she was blunt, said tariffs could push the U.S. 40% closer to a recession if supply chains stay messed up.
And that's not hypothetical, is it? We're seeing impacts.
Absolutely. Look at clean energy firms like Plug Power or Albemarle. They're already cutting production forecasts. Why? Because they can't get the Chinese mineral imports they need thanks to the trade barriers. It's hitting American businesses right now.
What about companies investing in their own future? Capital expenditures.
That's another worrying sign. Bloomberg reported S&P 500 capital expenditures, companies investing in new equipment, factories, tech, dropped 9.8% in Q1 2025.
Almost 10%.
Yeah. Steepest decline since 2009 during the last major crisis. Companies are pulling back on investment.
Yet some CEOs, like Bank of America's Brian Moynihan, are still talking about growth fueled by deregulation and tax cuts.
It's a narrative that seems increasingly detached from the data. If companies aren't investing, consumers are cutting back, and the government is borrowing $500 billion a quarter. What kind of growth is that? Where's the payoff? It feels like they're selling an idea that isn't matching reality.
Which maybe brings us back to gold. That massive spike on May 3rd.
Right, up 1.3% in under a minute. Over $280 per ounce jump. That wasn't just small investors hedging inflation.
No, you said $15 billion in institutional orders.
Driven by automated sell-offs of U.S. treasuries, big ETF reallocations, it was a system-wide flashing red light, a sign of eroding trust in fiat currency, in the dollar itself.
And central banks are buying gold too.
Record amounts. The World Gold Council confirmed China and India led the charge, buying 290 metric tons in Q1 alone. They're diversifying away from the dollar reserves.
While U.S. stocks look overvalued.
Yeah, the S&P 500 forward PE ratio was at 21.4, way above the average. And real returns on 10-year treasuries were still negative. So stocks look pricey, bonds aren't keeping up with inflation, gold looks attractive.
So it's not just a safe haven, it's capital actively fleeing.
That's how it looks. Fleeing a system that seems over-leveraged, unstable, the market's betting on gold, not on current monetary policy. The real red flag isn't just that gold is up, it's what that money is leaving behind. It signals a deep distrust.
And layered on top of all this economic stress, you have the tariffs. Still a major factor.
Huge factor. Average tariffs on Chinese goods are now around 135%. Plus, that 20% fentanyl surcharge.
And they ended the de minimis rule too, right? That $800 duty-free limit.
Gone. As of May 2nd, now pretty much every import gets taxed. That hits consumers directly, hits small importers hard.
We're seeing the impact at the ports already.
Definitely. Port of Long Beach, a key import hub, saw volumes drop over 19% year-over-year in April. Shipping costs from China have, well, exploded.
You mentioned that ship, the OCL Violet.
Yeah, incredible example. Racked up $420 million in tariffs on cargo, worth $560 million. Makes you wonder how anyone makes money.
And big companies are feeling it too. Apple.
Their CFO, Luca Maestri, said on their earnings call tariffs will cost them $900 million this quarter alone. $900 million.
Wow. And other importers.
The U.S. Chamber of Commerce says importers of solar panels, chemicals, electronics are seeing margins compressed by 30, even 40%. They just can't absorb these costs indefinitely.
So businesses are really struggling under this.
They are. It's a policy mess with zero clarity. If America's biggest, most powerful corporations are buckling under these costs, who can handle it? Who's left to drive the economy? It feels like the policies are strangling the very businesses they were supposed to help.
And the direct impact, the really human cost, is in manufacturing jobs, right? American factories.
Absolutely. Manufacturing lost 13,000 jobs in December 2024 alone, nearly 100,000 over the whole year.
That's significant.
It is. The Alliance for American Manufacturing call it not the factory jobs outcome we had hoped for. A very stark admission.
And you mentioned this isn't just job losses, it's something deeper. Decoupling.
Right. It's the entire infrastructure of U.S. manufacturing being sort of systematically dismantled and reconfigured. American and Chinese businesses are deliberately, methodically separating their operations, untangling decades of integration. It's a huge, complex process.
You see it happening on the ground.
Yeah, concrete examples. Factories reliant on Chinese parts are scrambling. The costs of resourcing or rebuilding domestically are huge, forcing shutdown.
And U.S. companies in China.
A record 30% are considering relocating operations. Highest ever. It's an exodus.
You mentioned Illinois.
Yeah. 4 major factories closed recently. Mass layoffs. That state alone has lost nearly 350,000 manufacturing jobs since 1990, down from over 900,000 to under 600,000. And it's accelerating. The auto industry is a really clear example of the cascade effect.
How so?
Tariffs hit Stellantis. They paused production in Canada and Mexico. Immediately, 5 U.S. supplier plants have temporary layoffs because their orders disappear.
Wow, direct hit.
And now Japanese automakers are reportedly considering shutting down U.S. plants entirely. That could cost 500,000 American jobs.
That's 1 million.
Potentially. And the Urban Institute warns these aren't just jobs, they're high-paying jobs that anchor entire communities. Losing them is devastating locally.
And the supply chain disruption works both ways.
Absolutely. Chinese factories lose U.S. customers, so they stop production or look elsewhere. But then American importers lose their suppliers.
Like who?
We've seen names like Krispy Kreme, Unilever, Energizer shutting facilities because their supply chains just became unsustainable, too expensive, too unreliable.
And the long-term data shows this trend.
Yeah, Census Bureau data from 2002 to 2022 is grim. Fewer manufacturing firms, fewer jobs, payrolls lagging, productivity stalled. It's a 2-decade structural shift that's now hitting overdrive. And the really bad part is, we're losing jobs without gaining efficiency. Productivity gains have stalled. That's the worst possible outcome for competitiveness.
I mean, it affects everyday things.
Yeah.
Like Christmas shopping.
Retailers are apparently scrambling right now to get Christmas merchandise from China because of tariff uncertainty. They're worried stuff just won't arrive.
That's incredible.
And when Chinese factories keep stopping and starting work to manage the chaos, it creates massive inefficiencies. Those costs get passed right down the line to consumers.
On top of all that, there's a skills gap.
A critical one. Older, skilled workers are retiring. Not enough replacements coming up with the needed skills.
So companies are turning to automation.
Exactly. Investing in digital tech, AI, advanced manufacturing. These need fewer workers, but they produce higher quality goods.
Which creates that paradox you mentioned.
Right. Manufacturing gets more efficient, more competitive, but less labor intensive. The jobs being lost today, many probably aren't coming back in the same form.
And this hits some areas harder than others.
The Rust Belt obviously hit hardest, but it's spreading. Even southern states that attracted factories with lower wages are feeling it now.
It sounds like a real mess. Politicians promise jobs back.
But unwinding these global supply chains is incredibly complex, incredibly expensive, and policies often have unintended consequences.
Like the Trump tariffs, making components more expensive for U.S. firms.
Exactly. Designed to protect, but also raised costs. The Biden administration kept many policies, but the disruption was already baked in.
And environmental rules play a part.
They do. Older U.S. factories face expensive upgrades. Some find it cheaper to move to countries with laxer rules. Which is perverse, right? U.S. environmental policy leading to more global pollution.
And the bottom line for consumers. Us.
Higher prices, reduced availability of products. As domestic production shrinks and imports get pricier, we feel it.
So the irony is, policies meant to protect jobs might be costing more jobs by making things too expensive.
That seems to be part of the dynamic, yes. It reduces demand. The real question is what American manufacturing looks like next.
More automated, more specialized?
Yes. Factories adapting are competitive, but employ fewer people. Future jobs need different skills technicians, people comfortable with tech, continuous learning.
So we need investment in education, training.
Urgently. And policies that support innovation while protecting workers through the transition. It's not just about capital flight, it's this fundamental shift. The clock is ticking, the stakes are incredibly high. The question isn't if change is coming, it's whether we'll be ready for it.
That's a really powerful point. And sobering. These economic shifts, they don't happen in isolation, do they?
Yeah.
They connect directly to global power, to individuals making huge moves. And here's where it gets really interesting. We need to talk about Elon Musk.
Oh, absolutely. His actions are central to this whole realignment. It's a massive shift.
It really is. The headlines are just stunning.
Yeah.
Musk threatening to pull out of all U.S. government contracts.
And then reportedly signing some kind of secret deal with BRICS nations, Brazil, Russia, India, China, South Africa, while Washington seems distracted.
It feels unprecedented. Did anyone see this coming?
It certainly caught traditional power circles completely off guard. Now, looking at the sources, it seems we shouldn't frame Musk's actions as just like an angry outburst or rebellion. It looks more calculated than that.
Calculated how?
More like a strategic move. Some sources even call it a succession, moving away from the U.S.-centric system. If innovators feel punished or overly restricted in one environment, as Musk has suggested about the U.S.,
Then they look elsewhere.
Exactly. It creates a powerful incentive to find environments that still seem to value and foster that innovation. It looks less emotional, more like a practical business decision in response to perceived U.S. headwinds.
And it wasn't sudden, was it, this disentanglement?
No, the sources suggest it's been systematic, quiet unfolding for months. Tesla pulling out of U.S. government EV funding programs.
SpaceX ending Pentagon collaborations.
Right. And Starlink pulling out of defense satellite evaluations, all done with very little fanfare, just quiet, deliberate exits.
And Washington was surprised.
Completely blindsided, according to the Wall Street Journal. Top officials caught completely off guard.
There's that quote from the DoD insider.
Yeah, very telling. We didn't lose Elon because he was incompetent. We just made it too expensive for him to stay. Connect that to the bigger picture.
Yeah.
It's about sovereignty, the cost of doing business under certain policies. Musk seems to be choosing the path of least resistance, greatest opportunity.
Starlink is a prime example of this pivot, isn't it?
Absolutely. Remember earlier this year, the Pentagon asked to override Starlink's controls for defense missions?
SpaceX denied that request.
Reportedly, yes. And shortly after, SpaceX was removed from 3 big U.S. satellite procurement programs.
Yeah.
Worth over $4 billion.
So the U.S. military cut ties.
Essentially. Lockheed Martin, Raytheon stepped in, Boeing got a classified surveillance contract. They scrambled to fill the gap.
But while the U.S. was pushing Musk out, other countries were pulling him in.
Exactly. BRICS nations particularly. South Africa, India, Brazil, they rapidly increased Starlink adoption after talks in March 2025.
India specifically pushed back against U.S. objections.
Outright rejected them, according to Reuters. Declared Starlink's expansion purely a domestic issue. By June, it was live in 5 Indian states, full national coverage planned for later this year. It shows a real divergence in how different powers view Musk's tech. And the implications are huge. There were those leaked Russian procurement documents.
Referencing non-state satellite providers.
Yeah, widely seen as an indirect invitation to Musk's team, signaling interest.
So, is Starlink switching sides?
That's the chilling analysis from a RAND Corporation expert who told Bloomberg, Starlink isn't quitting the defense business, it's just switching allegiances.
Wow. If that's true, who controls it?
Exactly. If it's not the U.S. government, who decides where it flies, who gets service, what gets blocked? The strategic impact is staggering. It's a commercial asset becoming potentially an unaligned global power broker.
And Tesla's making big moves too. Re-engineering its infrastructure, AI, building a firewall.
That seems to be the strategy. After those March EV tariff hikes in the U.S., Tesla cut ties with all federally backed EV projects here, charging corridors, grants, everything.
A clear signal.
Unequivocal. Then Musk turned to Brazil, signed that huge $2.3 billion infrastructure deal.
For charging networks, battery R&D, all outside U.S. jurisdiction.
Explicitly designed that way.
Correct.
And they rerouted supply chains through South Africa, Malaysia to dodge U.S. trade rules.
Reducing U.S. market exposure significantly.
By 38% in Q2 2025, according to Bloomberg Intelligence. A Tesla source told the FT it's about building that firewall against future policy whiplash from the U.S., a proactive disengagement.
And the really controversial move was the AI in China, right? Autobidder.
Hugely controversial.
Ow.
In May 2025, Guangdong Province approved Tesla's Autobidder AI for use in local energy balancing systems.
So American AI embedded in China's state-run energy grid.
First time this year. It's designed to optimize energy storage and distribution. Now it's helping manage power in major industrial zones there.
How do they get around the export restrictions as tightened 2024 rules?
Clever loophole. They registered it as a commercial non-vehicle energy platform, slipped right past the rules designed to block sensitive AI exports to China.
The leaving announcement, just quiet deployment.
Exactly. The U.S. Treasury has launched a compliance review, but Musk insists no rules were broken. It's setting up a major showdown.
What are the broader implications of that AI move?
Profound. As the CSIS expert told Reuters, this isn't about licenses. It's about sovereignty. Musk just embedded American AI into China's power grid.
And China might just be the start.
That's the concern. Could this model be replicated elsewhere? It raises massive questions about how U.S. tech, especially AI with dual-use potential, operates globally without triggering intervention. It's redefining national security boundaries.
How has the U.S. government reacted beyond launching investigations?
They seem to be playing catch-up, mostly reactive. The Treasury investigation into Autobidder is seen as a major test case for enforcing AI trade rules under the Expanded Chip Act. But they've also started sidelining Musk, haven't they?
Yes. Quietly removed his companies from key federal tech advisory groups by June. Tesla out of the EV Infrastructure Forum, X.AI out of the National AI Strategy Group.
Replaced by Amazon, Microsoft, Anthropic.
Right. White House official told the FT it was due to persistent alignment issues, especially his unpredictable foreign energy and satellite alliances.
And Musk's response.
Pretty blunt. If DC wants control, it should build its own infrastructure. We'll build where we're needed. Bloomberg called it a shift from cooperative decoupling to strategic sidelining.
Right.
And maybe irreversible.
It's not just the U.S., though. Allies are getting nervous, too, especially about Starlink.
Germany, Japan, Australia launching investigations.
Yeah, all asking the same basic question. Who controls Starlink in a crisis? Is it Musk, the individual, making calls based on his judgment? Or is there accountability to governments, to alliances?
And there have been incidents raising concerns.
The Wall Street Journal reported Germany is investigating claims Starlink refused to follow NATO emergency communication protocols during an exercise. That's alarming.
If true, it means it might not be reliable when most needed.
Or could be shut off unilaterally. Japan delayed Starlink's national rollout, citing lack of a clear wartime management plan. Australia pointed to Musk shutting down access near Gaza and Crimea without government consultation.
So it's seen as a critical asset, but without a clear chain of command.
Exactly. A NATO advisor told Bloomberg it's vital global infrastructure now, but operates like a strategic asset without state control. A serious problem for security.
Yet nobody's pulled the plug.
Not yet, because, practically speaking, it's often still the best option available. Faster, better coverage, better price. In many places, there's no real alternative.
Which shows Musk's leverage, doesn't it?
It shows how deep his influence runs, and the tough spot nations are in balancing strategic risk with operational need.
While U.S. allies worry, China seems to be rolling out the red carpet.
Completely opposite approach. Just 2 weeks after the U.S. hiked tariffs on Chinese EVs, China gave Tesla full approval to expand its Shanghai Gigafactory.
And launch that AI fleet optimization system nationwide.
Yes. And according to Bloomberg, Tesla got special treatment land rights for battery production, exemptions from data rules that even local Chinese firms struggle with.
It's a clear signal China sees value in keeping Musk engaged.
Definitely. Anhui Province even confirmed Tesla will co-lead a public-private EV research center, partly funded by Chinese state subsidies.
So while other U.S. tech firms pull back from China,
Musk is doubling down. By mid-2025, Tesla is basically the only major U.S. tech firm expanding inside China's core strategic industries, high-tech manufacturing, AI.
What's China's endgame there?
An Asia-Pacific trade analyst told the FT, China doesn't need to own Musk, it just needs to give him enough room to move. As long as he keeps building, testing, scaling tech in China, integrating it, Beijing seems happy.
They just need him to choose him over Washington.
That seems to be the calculus, and for the U.S., that represents a really profound, long-term strategic challenge.
And all this realignment, this economic and tech shift, it's happening against the backdrop of major geopolitical events, like the ongoing Ukraine war.
Absolutely. And the narrative around that conflict, particularly the perspective provided in our sources from Russia, ties into these broader themes of shifting global order and perceived negative effects on U.S. influence.
Right. And it's crucial we state again for you, the listener, we're reporting on the perspectives presented in the source material provided. We're not endorsing any single narrative of this complex conflict.
Okay, so from the Russian perspective articulated by President Putin, the conflict is framed within a long historical context. He points to NATO expansion since the 90s.
5 or 6 rounds of it.
Right, saying it ignored Russia's security concerns, calling it a kind of new colonial policy. Regarding Ukraine specifically, the 2014 events are described as a bloody, anti-constitutional coup, allegedly backed by billions from a previous U.S. administration.
So Russia's actions are framed as defensive, protecting certain populations.
That's the narrative presented. Protecting populations in Crimea, Donbass, Luhansk with cultural and historic ties, Putin claims peaceful resolution attempts, like the Minsk agreements, were undermined by the West and neo-Nazist elements in Ukraine, forcing Russia to recognize the republic's independence after years of failed talks.
And the current military goal.
Stated as aiming to put an end to the war unleashed by our opponents in the West and their allies in Ukraine. The tragedy is portrayed as an outcome of others resisting inevitable global changes, implying a shift away from U.S. dominance.
What about Russia's stated endgame? There was that controversial entire Ukraine is ours comment.
Yes, followed by a qualifier about respecting realities and sovereignty. The key point emphasized was Ukraine's 1991 independence declaration as a non-nuclear neutral state and not party of any blocs.
Russia wants a return to that neutrality.
That's the stated aim, seen as vital for Russian security. Putin claimed Russia suggested Ukraine withdraw troops from contested areas early on, but Kyiv refused. Then, he said, the logic of combat comes into play, citing that old saying, whenever the boot of Russian soldiers stands, it becomes ours, implying military gains are permanent.
And the failed negotiations. Russia blames external interference.
Specifically points fingers, claims Russia proposed talks multiple times, but Western partners allegedly thought that they would crush Russia and feast on it.
Naming former UK PM Boris Johnson.
Yes, alleging Johnson, with U.S. backing, came to Ukraine and advised against reaching an agreement with Russia, even though a consensus was supposedly neared during talks in Istanbul.
The consequence, Putin says, was more lost territory for Ukraine.
New territories found themselves under our control, and the Russian army advances daily. The narrative is, peace was possible, but sabotaged by the West seeking to weaken Russia.
Any specific military updates from this perspective?
Mention of Ukrainian incursions into Russia's Kursk region, claiming huge Ukrainian losses, 76,000 troops, a catastrophe.
And accusing Ukraine of diverting troops to the border.
Yeah, claiming Ukraine is creating border threats, stretching their forces thin, alleging only 47% staffing in combat units while extending the front line by 2,000 kilometers.
Russia's response is creating a border security zone.
Yes, 10-12 kilometers deep in Sumy, 8-10 kilometers elsewhere due to shelling and drone attacks. Putin stated taking Sumy isn't the current task, but didn't rule it out.
And the motivation attributed to Ukraine's border actions.
Purely political nature, just to demonstrate they can obtain something from their foreign sponsors, followed by that claim about $150 billion in aid, with one half being stolen. So you connect this deep geopolitical instability, this fragmentation of alliances, which Musk's actions seem to exemplify with these narratives.
And you see the potential negative effects on traditional U.S. leadership and influence.
Exactly. The U.S. seems to be playing catch-up now, trying to rebuild trust with allies, questioning its reliability, scrambling for tech replacements, investigating companies it once championed.
This is the real cost of losing leverage.
It seems so. Not because Musk became an enemy, but maybe because America, through its policies, became perceived as a place where pushing boundaries gets punished, as he put it. It's a profound global shift.
So pulling it all together. The U.S. economic wobbles, Musk's strategic pivot, the geopolitical friction. It's clear Musk isn't just ignoring U.S. policy.
No, he's actively building a future that works around U.S. policy.
We have Tesla's AI in China's grid. Starlink booming in India, Brazil, South Africa, away from U.S. oversight.
SpaceX doing 40% of its launches for international clients now. xAI training its models in UAE data centers.
It's a deliberate pattern of global diversification and maybe decoupling.
Which leads to that huge question. Did the U.S. fumble? Did it lose the one technologist it couldn't afford to lose? Let a key strategic asset slip away?
Or has Musk just revealed a new playbook, a blueprint for tech economy that others, companies, even nations, will now rush to copy?
It feels like more than just a policy dispute. It looks like a geopolitical custody battle for the planet's most influential technologist. And the outcome of that battle will shape everything for years to come.
So what does this all mean for you listening? Well, it shows just how interconnected everything is. Decisions made in Washington or by a single CEO or in a conflict zone, they ripple outwards.
Right. Domestic economic policy affects factory jobs. Tech innovation chooses its path. Historical narratives fuel current conflicts. It all intertwines to reshape that global balance of power.
What stands out most to you from today's deep dive? How do you see these shifts reshaping the world in the coming years? It's definitely something to think about. Thanks for joining us.
Yeah, if this deep dive got you thinking, let us know. And for more explorations into the forces shaping our world, please do like and subscribe.